Welcome to the Deep Dive. Today we're tackling CRISIL Limited's latest numbers, the unaudited results for Q3 and the 9 months ending September 30th, 2025.
Yeah, we've got the filings, the press release, the presentations, quite a bit to sift through.
Exactly, and our mission isn't just to read it out, but to figure out what it all means. We're looking for the real story behind the strong growth, this big acquisition they announced, and, how the different business segments are actually performing.
And look, if you're just tuning in, here are the two big things to grasp right away. First, CRISIL managed solid growth, even with all the global economic uncertainty swirling around. That shows some resilience.
Okay, and second?
Second, they've just announced a pretty significant acquisition, signaling a real strategic push, and they boosted their interim dividend, sending a strong message to shareholders.
Okay, let's unpack that. Starting with those Q3 financials. The consolidated year-on-year picture looks pretty good, doesn't it?
It does, especially considering the backdrop.
Right, so income from operations, that climbed 12.2%. It crossed the Rs 900 crore mark for the quarter. Then you look at profitability. Profit before tax, or 20%.
Which is a healthy jump.
Yeah, and that filtered down to profit after tax, PT, growing 12.6%.
Yeah.
The key takeaway isn't maybe the exact numbers for everyone, but that strong double-digit growth pretty much across the board. That's not easy right now.
No, it isn't. And if you zoom out to the 9-month view, it reinforces that picture. This isn't just one good quarter.
Sustained performance.
Exactly. For the 9 months, income's up 9.4%, getting close to Rs 2,600 crore. And actually, PBT and PD grew even faster over that period, 13.1% and 14.2%.
So that sustained growth, that gives them the confidence, the firepower for these bigger moves.
Absolutely. It fuels the strategy.
Speaking of confidence, let's talk shareholder rewards. The board approved a third interim dividend, 16 rupees per share.
Payable early November, yeah.
And that 16 rupees matters because last year, same quarter, it was 15. So a little bump up.
It's a signal.
But let me ask you this then. They announced this dividend increase while also announcing this major acquisition, which must cost a fair bit. We'll get to the price tag.
A lot, yes. Around 335 crore rupees.
So is this increased dividend really sustainable alongside that kind of spending? Or is it more about boosting confidence, balancing out the news of a big spend?
That's a fair question. I think it's definitely a strong signal. The fact they're doing both increasing the payout and committing, over 300 crore for an acquisition suggests management feels really confident about their cash flow.
Especially near term.
Yeah, near-term cash flow and their earnings projections. Particularly, you'd imagine, from those faster-growing analytics parts of the business. They're essentially telling the market, look, we can invest heavily for the future and still reward you today.
Okay, that does set a high bar for performance going forward. Now, let's get to that acquisition, because this is where it gets really interesting. CEO Amish Mehta announced they're planning to acquire 100% of McKinsey Price Matrix Co.
This is a big strategic play. It tells you a lot about where CRISIL sees its future growth.
And the purpose seems pretty clear from the release.
Crystal clear. They're buying this to bulk up their global benchmarking services, specifically targeting wealth management. It's about strengthening their hand in analytics and consulting across financial services globally. Less reliance maybe on just the domestic debt market cycles.
And the price tag reflects that ambition, US $38 million.
Which, yeah, translates to roughly Rs 335 crore. Big number.
And what's also interesting is how they're doing it. Through CRISIL Canada Inc., a brand new subsidiary just set up in August.
Yeah.
Why the Canadian structure, do you think?
Well, it speaks volumes about the global angle, doesn't it? They're likely streamlining their international ops, maybe setting up a solid base in North America for financial services benchmarking.
Yeah.
Makes sense. And Price Matrix Company, it's a specialized tool. It seems to fit right into what they already do, but adds a specific wealth management focus. It's not just buying a company, it's like injecting specialized data and know-how directly into their global analytics engine.
And this fits with what management's been saying.
Absolutely. It ties right into their commentary about driving growth through what they call domain-led AI solutions and investing in specialized talent. This is basically buying a ready-made specialized domain to power those AI and consulting ambitions.
Okay, digging into that a bit more, you mentioned domain-led AI. How does acquiring a benchmarking tool like Price Matrix actually help with developing AI solutions?
Well, think about what benchmarking is. It's fundamentally about analyzing huge amounts of data on performance, efficiency, comparing wealth managers against their peers.
Right, needs lots of data.
Exactly. To build credible AI tools, whether that's for risk modeling or optimizing performance, whatever you need, vast, high-quality, structured data sets. By buying Price Metrics, they get immediate access to a proven, specialized data pipeline and the methodology behind it. It just accelerates their ability to build AI into their wealth management consulting offerings.
Got it. Speeds things up significantly. Now, just quickly before we move on, there was also a mention of an internal merger, Bridge to India Energy Private Limited, merging with CRISIL Ltd. Seems minor compared to the acquisition.
It's more of a housekeeping point, but important if you're tracking the detailed filings. This merger, effective September 25th, basically simplifies their corporate structure.
Tidying up?
Yeah, tidying up the books. It meant they had to restate some previous standalone figures. So if you're comparing year-on-year numbers very closely from the standalone reports, that explains any small differences. It kind of prepares the ground for handling the complexity of bigger global moves, like this Canadian expansion.
Okay, that makes sense. Structural clarity is important. Right, let's pivot now to the actual performance drivers in Q3, the two main engines, rating services and research, analytics and solutions. And this is where we see a real difference in the story.
A definite divergence, yeah.
Starting with rating services. Revenue growth looked okay, up 11.2% year-on-year, hitting about Rs 267.6 crore. And they highlighted they kept their leadership in corporate bond ratings.
Solid top line there, but that's only half the picture, isn't it?
Exactly. The profit side tells a different tale.
Yeah, the devil's in the margins, as they say. Despite that revenue growth, the segment profit barely moved. It was up only 3.5%.
Which means the margin took a hit.
A significant hit. The segment profit margin drops from 48.2% in Q3 last year down to 44.9% this quarter. That's a fall of over 3 percentage points.
Wow, okay. That margin compression gives me pause. When your core high-margin leading business sees profit efficiency drop like that, even with revenues up, that feels like a potential warning sign. What's the explanation?
Well, it seems to be a direct result of the market they're operating in. Management commentary essentially points to the macroeconomic climate. The ratings business thrives when companies issue debt, when capital markets are active.
And right now?
Right now, with higher interest rates, global uncertainty, the debt market has slowed considerably. We'll get to the specific numbers later, but it means less ratings work overall and probably more price competition for the deals that are happening. So they're still rating, but it's just less profitable in this environment.
That context makes the performance of the other segment even more crucial then. Research, analytics, and solutions must have really carried the weight this quarter.
It absolutely did. It was the clear star performer, the resilience engine, you could say.
Okay, give us the numbers.
Revenue here grew 12.7%, even faster than ratings, reaching Rs 643.6 crore. But the really stunning part is the profit growth. Segment profit shot up by a massive 35.2%.
35%, that's huge. How did they manage that? How did the margin jump from 18.3% last year to 22.0% this year? What fueled that?
It seems quite broad-based, which is a good sign. It shows their investments in this area are paying off. They saw growth across data analytics, consulting, credit, and risk solutions.
Any specific areas they called out?
Yeah, they mentioned getting good traction with their buy-side platform, CRISIL Integral IQ. That's their tool for investment managers. They also talked about deeper engagement with clients for benchmarking through CRISIL Coalition Greenwich.
Okay.
And finally, the Global Analytics Center, GAC, kept growing, apparently boosted by new, bigger projects with S&P Global, their parent company, so really centralizing more of that global intelligence work.
So the underlying message seems pretty clear. When the traditional domestic debt market slows down, this global consulting and analytics business, the very area they're investing heavily in with acquisitions, is stepping up.
Precisely. The volatility in the credit ratings market is being offset by growth in these, fee-based consulting and analytics services that are less tied directly to bond issuance cycles. That's the whole strategic narrative of the quarter right there.
Which brings us neatly to that challenging backdrop. Let's put this internal performance into the wider economic context. That 12% overall income growth looks even more impressive when you consider the headwinds.
Yeah, the source materials are pretty consistent here. Cautious optimism on India, but significant drag from the global situation. CRISIL themselves see India's GDP holding at around 6.5% this fiscal year, which is decent.
Right.
But they explicitly flag downside risks because of global uncertainties. Inflation in India has eased a bit. CPI dipped to 1.5% in September, and the RBI's holding rates steady with a neutral stance. But the specific pain points for CRISIL's core market are quite stark.
And we saw those pain points reflected directly in the ratings segment margin, didn't we?
Absolutely. The data they cite is pretty damning for the debt market environment in Q3. Bond issuances actually degrew sharply, down 32.9% compared to the same quarter last year.
Wow, nearly a third wiped off issuance volume.
A massive drop after strong growth the previous quarter, too. That perfectly explains why the ratings margin got squeezed. There's just less work flowing through.
And it wasn't just corporate bonds, was it? Broader credit trends were also weak.
Correct. Bank credit growth is still somewhat sluggish, around 10.0% as of August 2025. That's down from 13.6% a year earlier.
Okay.
And crucially, credit growth for large industries, the big corporate clients, continues to be really muted, just 1.8% growth as of August. Compare that to 8.6% the previous year.
So big companies just aren't borrowing much right now.
Exactly. When corporations are hesitant to take on new debt or issue bonds, the traditional rating agencies feel that slowdown directly in their pipeline and pricing power. CRISIL's overall 12% income growth is really a testament to how hard that analytics segment must be working to counteract these headwinds.
Yeah, it absolutely underscores why that strategic move into global analytics and consulting like the Price Matrix deal isn't just about expansion. It's about building resilience against these domestic credit cycles.
Well put.
Okay, moving beyond the pure financials, let's quickly touch on external validation. Reputation and institutional standing are pretty critical for a firm like CRISIL.
Definitely. And they highlighted a couple of recognitions this quarter. They were named a category leader in a report by Chartis on regulatory reporting solutions for 2025. That's a respected benchmark in the risk and compliance tech space. And perhaps more interestingly, given their strategic focus, they were featured in several Gartner Hype Cycle reports, including ones on generative AI in banking and global trade finance transformation.
So that confirms their internal push towards AI isn't just talk.
It suggests it's being recognized externally by key industry analysts as a relevant, forward-looking strategy. It adds credibility to their focus on domain-led AI.
And finally, they also detail their social impact activities, their CSR work.
They do. Their corporate social responsibility efforts are ongoing. The CRISIL Foundation expanded its main program, Main Pragati, now reaching about 5 lakh community members in Assam and Rajasthan, focusing on financial literacy and empowerment.
That's quite a reach.
It is. And they also continue to be a major partner for the Reserve Bank of India's financial literacy centers, the MoneyWise CFL program. They're now running 707 of these centers across 13 states and 4 union territories. So using their financial expertise for broader societal benefit, it's clearly something they want to highlight.
Okay, that brings us towards the end of our deep dive on CRISIL's Q3 2025 results. So, to wrap up the key findings for you, it was really a quarter defined by pretty robust overall financial growth, achieved despite some serious market headwinds, especially that shocking 32.9% drop in domestic bond issuances.
Right, which directly impacted the profitability, the margins in their core ratings business.
Exactly. But the big stories were that aggressive strategic acquisition of McKinsey Price Matrix Company, signaling a major push into global wealth management benchmarking, and the stellar performance of the Research, Analytics, and Solutions segment. Its 35% profit surge really drove the overall result and highlighted the firm's strategic shift toward these higher growth global services.
Yeah, we've seen management clearly prioritize this global expansion, setting up CRISIL Canada Inc., funding this large acquisition, talking a lot about domain-led AI. They're investing heavily to build a more resilient, perhaps differently balanced business.
So the final thought.
Well, the provocative question for you to think about as you watch CRISIL going forward is this. Given the volatility we've seen in global markets and the clear slowdown in domestic credit, how fundamentally might these big global investments in acquisitions, in AI, and analytics actually redefine CRISIL's core identity and its risk profile over, say, the next 12 to 18 months? Could we see them becoming perceived more as a global consulting and analytics firm rather than primarily a domestic rating agency? That's the big strategic evolution to keep an eye on.
A fascinating question indeed. Great analysis. Thanks for breaking it down. And thank you for joining us for the deep dive. We'll catch you next time.